Good day, traders. Richard Jacobs here, and welcome to this week's edition of the Underdog Weekly Perspectives Report, where we reflect on the past trading week and also form some views and perspectives on what we think the market's going to be doing over the coming week. Well, starting off with the past week, and as always, we're looking at a daily chart of the top 40 up on our screen. The past week's been a very interesting one. We saw a follow through to the upside here as the week started. Pretty much, in line with what our thinking was at that stage. And then we had this candle printing on Tuesday. And this candle would have potentially confounded a lot of traders again, because it's a very bearish candle. We've got an overbought stochastic. But what would have been important is the comment we made last week about looking at this leg over here and actually having a look at that 78.6 retracement level. Let's just bring that up on our retracement, or bring up that fib level right there. So on Monday we actually violated that 78.6 level. We closed above, and so in line with our comments in last week's perspectives report, we didn't actually regard this candlestick here as not that we wouldn't regard it as a potential to having to preempting a continuation move to the downside, but for our purposes, you'll recall what we said was, once we move into that zone between the 78.6 and the 100%, what we found is that the probability of the continuation move to the downside actually decreases, and the probability of the market actually just pushing to the upside increases. So despite that bearish red candle over there printing on Tuesday, we didn't look to pursue any positions to the downside, and sure enough, into the balance of the week we saw the market pushing to the upside. Not cleanly. Wednesday was a big reversal candle versus Tuesday, but Thursday and Friday were, the market really struggled on the upside. You'll see some long wicks on these candles over here, but we did actually tap through this 100% level. Now, where does that leave us? It actually leaves us in a very tricky position, because once again, what we have is a stochastic that's it's a messy looking stochastic. It has come off these overbought levels to a certain extent. Yes, we do have these wicks on the daily candles, but we this last candle over here on Friday does look like a reversal candle. So we, the potential for some consolidation certainly does look on the cards. And, we've got to add another piece to the puzzle over here. What we're seeing is we didn't get the close above this 100% level. In other words, we didn't see the market pushing emphatically through this 100% level and closing above, which would have been, something that we would have needed to confirm that break of structure to the upside. So that sort of plays into the line of thinking that there's some form of consolidation happening on the cards. But as I said, the stochastic is a bit messy. You'll notice it's actually slanting to the upside now, potentially looking for a failed stochastic reversal, which basically means that coming off overbought conditions, it rolls down, and now it's looking to break back up above its signal line into this overbought territory again. That could certainly happen, and that would happen if we see the market pushing up to the upside early in the new week. So structurally, it's a very tricky spot that the market is in here. And one of the comments we made to our daily subscribers towards the tail end of last week was that it's very important now to see what the market does, and then to allow your trading action to follow the market. Don't try and preempt things at this stage. So what we're going to be looking for is we're going to be looking to see what does the market actually start doing early in the new trading week. If we see market strength and a push through this 100% level again, breaking close potentially with a failed stochastic reversal, that would be quite bullish. We then look at that break of structure to the upside and evaluate how far could this market potentially move to the upside before we see a consolidation starting to take place. But certainly we'd be much more bullish in that particular scenario. If the market follows through to the downside of these long wick candles over here, and we see the stochastic also starting to roll down in a violation of these lows over here, then we'd certainly start looking for some potential consolidation. Not very importantly, not a continuation move to the downside, but really a consolidation in this bullish move to the upside. And if we get into that scenario, we could probably start eyeballing this previous price structure coming in at around about, let me just zoom in, around about the 47,000 level as a potential area that the market could initially retrace to or consolidate back down to, and that comes in just above that 38.2 retracement level over there. So two directly opposing scenarios that could potentially play out, but that just shows that we at an inflection point in terms of the market taking a particular directional bias at this particular point. If we look at what's happening on the volatility level, our normalized ATR, which is our measure that we use to assess volatility, again, nothing, it ticked up again during the course of the week, but really it's hovering around these levels, and the expectation is that we continue to hover around those levels as we go into what we expect to be a relatively low volatility August month from the end of next week. Let's have a look and see if some of the international markets can corroborate what we're seeing on these on the price structure. And what I'm going to kick off with is let's just pull up the oil. Right, so sorry. So this is what we saw on oil last week. Well, I mean, the market had been putting in these lower lows and lower closes, and then we had this rally that happened to the upside over here. And we'd highlighted this level again, around about $50 a barrel, and we said if we had a break and close above that level, that would really represent a structure break to the upside. Notice how the market pushed up hard into that $50 level on an intraday basis on Thursday. It actually went right through, but then it came back down into the close. So at the moment, that level is actually technically holding with a bit of a false breakout over there. And notice how the market has actually started rolling back down over here. So very interesting to see what's happening on the oil market at the moment. And if we see continuation move to the downside, then certainly that would be add to the case or add to the bearish case for the direction of the oil price at the moment. If we have a look, let's have a look at gold. Seem to be doing the commodities first. Gold's pretty much continuing to move inside that channel that we'd highlighted, looking quite bullish. That false breakout over there, or what we regarded as a false breakout over there, and then a continuation move to the upside. Very important, the initial level to watch is this, around about, let's call it 1256, 12 to 1260. If the gold can bullishly push through there, then certainly we definitely gonna it's gonna corroborate our view that we're trading within a quite a broad channel over here, about a $80 channel over here, and we'd expect the market to continue to retrace to the upside. If we start hitting resistance around here, I mean, this would be a great place for the market to actually start finding resistance. Because we start tapping in around about that 61.8 retracement level. So if we saw the market, for instance, early in the week push up into and reject that 61.8 level around about this price structure over here, that'll add the case for the continuation move to the downside. Notice again, it's an example of a market at a potential inflection point, which is reflecting what's happening in our top 40. We've got markets in retracement, which could continue to the downside, or could really just push to the upside. If we have a look at the S&P, the S&P is one of those markets that's just looking completely bullish at the moment. There's no inflection point at this stage, and if you at any point along this line really try to short this market, you would have gotten yourself into trouble. One of the things we did highlight was this, just looking at this last leg of the move over here. is this 141.4 Fibonacci projection level, which kind of lines up with around about the 2500 level on the S&P. And really, at this stage, it wouldn't be surprising to just see this market push up towards those levels, and the $2,500 level being a round number lining up with the Fibonacci level, that could really add to the case for some kind of a resistance manifesting around about these areas. I just want to have a look and see if there's any one-to-one. Yeah, the one-to-one projects a bit further if you're looking for one-to-one projection of this leg. Just mirroring it on this particular leg, it would push up to about 25, somewhere between the 2500 and 2520 mark, and that could also be a zone. So let's call this zone potential termination zone for where the S&P could move up to, but it's still it's still some headroom to the upside over here, which adds to the case for still further bullish action, also translating into further bullish action on our own local market. And then finally, the one that's probably going to play a big role in the week ahead, the Rand. We had a very interesting retracement on the Rand happening over here, very deep retracement, and we all eyes on this level around about the 1280, because if we see a violation, a break and close below this 1280 level, it does open the downside up over here for further Rand strength, which would inhibit our market's upward momentum. So again, potential playoff happening between the S&P and the Rand, especially if we see a violation of this 1280 level over here. Also bear in mind, in the week ahead, we've got lots of local politics playing out in the news. That could potentially impact on our currency. We've got the US Fed on Wednesday doing their thing on interest rates. Have an eyeball on that, or keep an eye on that. That'll no doubt shake things up as well, leading up to Janet Yellen's speech and the Fed decision. So contextualizing that back in our price structure, again, it's one of those weeks as we head into the end of the month, you just want to perhaps be even more cautious. I know I say this in every video. I bang my head about being cautious, being wary, applying good risk management, but especially at this particular point, I think we're in a situation where the market could literally go either way at this stage. Short-term indications are that we are going to see a retracement playing out, but certainly there's if you look, there's certainly potential for this market actually just to push to the upside and break structure to the upside, especially if we see the Rand continuing in its in a weakening trend of its current retracement, and the S&P continuing to push to the upside. So folks, that's pretty much it. I just want to check if there are any potential stock trading opportunities floating around. There's maybe one I can give you guys to have a look at, see if it fits in with your trading criteria. I think it's on Tiger. Let's just pull that up. Yeah, there we go. We've had it's just we've had a push to the downside on Tiger over here in this rally that's happened over the past few weeks to the upside. Stochastic is moving to overbought territory. If you want to get short this stock, you pretty much need to wait for a break of structure or a break or a move to the downside of this last candle, which is quite a bearish looking candle, and then you could probably ride it down to these previous swing lows over here. If you want specific levels, we're probably looking at stops above 397.30 and target levels coming in at about 365.50, and within that you can carve out where your entries and triggers are to give you the reward to risk that lines up with your own particular trading strategy and trading system. So guys, that's it for this week. As always, and I repeat the warning be wary, especially early in this week. Don't push things too hard. Rather see which way the direction the market is looking to take before you load up on any positions. All the best for the trading week ahead, and I shall chat to you guys next week. Cheers.